Everybody, today we'll be discussing a popular stock, Castor Maritime. The stock has risen from as low as 11 cents over the past year to now a high of 2.60 over the past couple of weeks. We'll be discussing the company's financials and if it's still worth it to invest in the company based on its current stock price and potential growth. If you aren't subscribed to my page, make sure to hit that subscribe button, crush the like button so as many people as possible are able to see these videos. Leave a comment with your thoughts about the content, whether you agree or disagree. Additionally, make sure to sign up for my Patreon. The link is below. You'll get insight into my watch list, my portfolio, buys and sells that I do on a daily basis, as well as stock research that I do and potential stock buys that I send out to everybody. We're going into the financials. We'll discuss high level what Castor Maritime does. They're a dry bulk shipping company. They provide services to various companies who are trying to ship goods from one country to another country through ocean or other waters. The company was founded in 2017. Their offices are located in Cyprus. And finally, the company is looking to grow their business through the acquisitions of various new and modern vessels from different companies who might not need those tankers anymore. We saw that recently that the company, due to the coronavirus and the impact on the industry, they were able to acquire 3 vessels at a discount compared to what they would have been able to buy them prior to the coronavirus. This is the company's strategy in order to be able to increase their capacity to meet demand once the coronavirus and the impact has subsided. The company will be able to grow their revenues through the increased demand, and they'll have the vessels necessary to meet that demand. We can see from this graph the company's stock price has surged over the past few months. Since August, we can see 15 cents, and you can see that the low of the 52-week range is 11 cents, and the high being 2.6. That high having occurred possibly like within the last week or two. The company has declined a little bit over the past week to about $1.40 currently, and then 1.36 after hours. If we take a deep dive into the financials, the company's revenues have steadily increased over the past few years. In addition, when we look at the quarterly revenues, even with the coronavirus, they've been able to maintain their revenue levels at about $2.7 million per quarter, which is about a run rate of $10.9 million over the whole year. From a balance sheet perspective, the company has raised cash over the past couple months, and primarily this cash is to fund their losses as well as to be able to acquire additional vessels for them to be able to meet capacity potentially in the future once more demand for shipping vessels is required from various companies. You can see that the company's current assets are greater than their current liabilities. They do have long-term debt. However, overall, their assets are higher than their liabilities, which is a healthy sign. In addition, when you look at it from the past few quarters, we can see that they've raised money as their cash balances have increased. Their liabilities have overall stayed steady, so that the company is not increasing their liabilities. And we can see that a lot of these tanker business, cruise lines, etc., their debts have increased because of the cost to maintain these tankers and cruise lines, etc. However, their costs and their liabilities overall have stayed consistent. From a cash flow perspective, the company was a cash flow positive in the prior year. We can see from a quarterly basis in the current year, they were positive first quarter. They were negative 427,000. And then again, they were a positive 79,000. So the company has been able to stay pretty steady from a cash flow perspective. So they don't need much cash in order to be able to fund their operations. So that 40 million will last them quite a while. Castor Maritime is worth keeping an eye on. There is upside potential with the recent acquisitions of vessels and revenue growth that they could see when there is additional demand for vessels. The cautionary warning is that the company is currently trading at a premium at 5 times sales, which is higher than the industry average, which sees at the high range 3 times sales. Investors are factoring some of that future revenue growth into the price currently, but the question is how much more can that revenue grow in the future? I wanted to provide everyone an unbiased opinion on the stock, as I'm currently not invested and thought that there was quite a bit of volume on the stock. So these are my thoughts. Overall, there is some potential based on the management's recent capital allocations. However, the unknown is how much more can the revenue grow? These are my thoughts again. Let me know what you think. As always, make money, enjoy life. Peace.